Welcome to the Deep Dive, where we cut through the noise of earnings calls to bring you the insights that really matter.
Today, we're digging into Limoneira Company, ticker LMNR. They just had their Q3 fiscal 2025 earnings call.
Yeah, and it's a fascinating one. An agricultural company, sure, but with this growing, pretty significant real estate angle.
Exactly. It's not just lemons and avocados anymore.
So today, we'll look at how they handled a challenging quarter, what big strategic moves they're making, and what management seems to be signaling for the future.
We'll touch on everything from lemon prices, which were tricky, to these big land development plans.
And stick around, because later we've got a sort of outrageous but maybe plausible long-term trade idea based on all this.
But first, the usual reminder.
Right. What we talk about today is just for informational purposes. It's definitely not financial advice. Please always do your own research before making any investment decisions.
Okay, let's get to it.
All right. The headline numbers for Q3 FY 2025. Total net revenue came in at $37.5 million.
Which is down pretty sharply, about 25% from $63.3 million last year.
Yeah, quite a drop. And profitability took a hit, too. GAAP EPS was actually a loss of 6 cents.
Compared to a gain of 35 cents the year before.
Ouch. And the adjusted non-GAAP EPS, also negative at minus 2 cents, down from positive 42 cents last year.
Adjusted EBITDA followed suit, $3.7 million this quarter versus $13.8 million in Q3 last year. A big slide.
So those numbers look, well, pretty rough year over year.
They really do. But here's the interesting part, the market's immediate reaction.
What happened?
Well, despite those numbers, the stock actually edged up after the announcement. It hit an intraday high of like 4.5% up from its previous close.
Huh. On higher volume, too.
Yeah, noticeably higher volume, which suggests investors weren't totally spooked by the quarterly performance.
So they're looking past the immediate results.
It seems like it. More of a cautious but, constructive view, focusing on the strategy, the forward-looking stuff, rather than just these backward-looking numbers.
Okay, so there's definitely more going on here than meets the eye. Let's unpack that.
Let's get into the weeds a bit, the agricultural segments.
Right. Where did those revenue numbers come from?
Okay, so fresh packed lemons brought in $23.8 million. Volume was about 1.4 million cartons, pretty stable.
But the price?
Lower. Average price was $17.02 per carton. Last year it was $18.43. So stable volume, but yeah, weaker pricing hit them there.
And avocados, that was a bigger drop, right?
Much bigger. Revenue fell to $8.5 million from $13.9 million. Volume was way down, about 5.7 million pounds versus 8.9 million last year.
Price per pound?
Down slightly too, $1.50 versus $1.57, but the volume was the main story there.
Okay, any bright spots?
Oranges, actually. Revenue was up slightly, $1.7 million versus $1.2 million.
Oh, interesting. Why?
Higher volume, 94,000 cartons. But again, pricing was weaker, average price of $18 compared to almost $27 last year.
So mixed bag, but generally pricing pressure seems to be a theme.
Definitely. And brokered lemon sales were way down too, $3.8 million compared to $9.8 million. Plus, farm management revenue dipped because they lost a contract.
So management's explanation for all this?
Well, for lemons, they pointed to pricing pressure early in the quarter. But they did strategically hold some fruit back in storage, hoping to catch better prices later on, which they apparently did to some extent.
And the avocado volume drop?
That was mostly the trees themselves, the daring nature. Basically, a big harvest one year often means a smaller one the next while the trees recover. It's a natural cycle.
Right, so you're fighting market prices in biology. Tough business.
It really is. Now, on the cost side, total expenses did decrease, down to $48.1 million from $54.3 million.
Okay, some savings there.
Yeah, but not enough to offset the revenue drop. Operating income was $9 million last year. This quarter, it swung to an operating loss of $600,000.
Wow. Really shows how sensitive they are to that top line.
Absolutely, which is why their strategy is so important.
Okay, let's talk strategy. The CEO mentioned a two-part value creation strategy. What's that involve?
Right. Part one is basically optimizing the farming side, making the agriculture more efficient and profitable. Part two is capitalizing on their other assets, specifically land and water.
So let's start with the farming side. What are they doing there?
The big news is the Sunkist partnership. This is a major move. They're planning to merge their citrus sales and marketing into Sunkist Growers.
Okay, what's the expected impact?
They're projecting about $5 million in annual cost savings on selling and marketing. That should give EBITDA a nice boost starting in fiscal 2026.
So basically outsourcing sales and marketing to save money and potentially get better reach?
Exactly. They think it'll open doors to new customers, improve efficiency, and help normalize lemon profits next year with better pricing and utilization. It kind of de-risks that whole side of the business.
Makes sense. What about beyond lemons? Avocados.
Huge focus there. They have about 700 acres of young avocado trees that aren't producing yet, but should start over the next, say, 2 to 4 years.
And they're planting more.
Yep. Planning to add another 500 acres by fiscal 2027. That's almost doubling their avocado producing acreage.
So the big payoff for avocados is still a few years out.
Looks like it. They expect the first really substantial volume increase in fiscal 2027. So it's a longer-term growth play.
Okay, so that's the farming optimization. What about part two, the land and water assets?
Right, this is where it gets really interesting, I think. Real estate monetization is a huge piece of the puzzle.
Like the Harvest at Limoneira project.
Precisely. That joint venture is expected to generate about $180 million in distributions over 7 fiscal years.
And they're already getting cash from that.
Yep. $10 million came in this past April, on top of $15 million in FY 2024. They're expecting another $155 million over the next 5 fiscal years.
That's a pretty significant, predictable cash flow stream, isn't it? Separate from the farming volatility.
Totally. And that's not the only real estate play. They're actively looking at developing their 221-acre Limco Del Mar property in Ventura County for housing.
That sounds complicated, especially in California.
Oh, it is. It involves a big environmental review under CEQAA. Then it needs approval from Ventura voters through a SOAR initiative, and it needs LAFIO review for annexation. It's a multi-year hurdle race.
What kind of investment are we talking?
They expect to spend maybe $3 to $5 million over 3 to 5 years just on getting the entitlements, the permissions. Most of that gets capitalized.
But the potential value, if they succeed, could be huge.
Potentially massive. There are 2 big steps: getting it entitled and then actually developing it. Each step could unlock significant value.
And water. You mentioned water assets.
Right. They sold some water pumping rights back in January for $1.7 million, booking a $1.5 million gain. Shows they're actively managing and monetizing those water assets too.
Got it. Any updates on guidance for this fiscal year 2025?
They reiterated their volume targets: 4.5 to 5.0 million cartons for lemons and about 7.0 million pounds for avocados.
Okay. And the balance sheet, how's the debt look?
Long-term debt was about $63.3 million at the end of July, up from $40 million at the end of last fiscal year. Net debt around $61.3 million.
So those real estate distributions are pretty important for managing that debt level.
Definitely. They provide cash flow to handle debt and fund these future projects, like the avocado plantings and the Limco Del Mar entitlement costs.
So pulling it all together, this dual-track strategy, optimize farming, monetize land, aims to make them less dependent on fruit prices.
Exactly. Build resilience, unlock value that's maybe hidden on the balance sheet right now. It's about creating a more stable, valuable company long term.
And how does this fit into the wider market? Agribusiness hasn't exactly been setting the world on fire lately.
No, it hasn't. You look at ETFs like MOO, performance has been mixed.
Sure.
Input costs, weather, disease, it's always tough. And LMNR stock itself has struggled over the past year, down about 37%, while the broader market, like the SPY, was up.
But the reaction this quarter suggests maybe sentiment is shifting?
Possibly. It suggests the market might be starting to buy into this strategic pivot, looking beyond the current farm results to the potential of Sunkist savings and real estate cash flow.
Let's talk outlook. What did they say about lemon prices for next year, fiscal 26?
This was interesting. They're expecting a return to normalized pricing. They even threw out a target of prices with a 2 in front of it, so maybe around $23 per carton.
Why the optimism after this year's weakness?
They see international supply getting tight. Apparently, a freeze in Turkey could impact their crop for 2 years. And Spain's had weather issues too. They're projecting maybe 20–30% shortages globally.
So less competition.
Potentially. Plus, the Sunkist deal should bring more stability through contracted business. They seem to think this could finally end a tough, 7 or 8 year cycle for lemon pricing.
Okay, that's lemons. What about avocado volumes for FY26?
Still early days, but initial signs suggest volumes might be similar to this year, maybe even a bit lower.
So no big jump next year?
Probably not. The real breakout year they keep pointing to for avocados is still fiscal 2027, when all those new acres start producing significantly.
Got it. So for someone watching Limoneira, what are the key things to track? the main catalysts?
Okay, definitely watch for the Sunkist deal to formally close and see if those $5 million in savings actually materialize in FY26 results.
Right. Keep an eye on this year's volume guidance. Are they hitting those lemon and avocado numbers?
Exactly. Also, the timing and consistency of those Harvest JV cash distributions, are they coming in as expected?
And the big one.
Yeah, the Limco Del Mar. Any news, any milestones, positive or negative, on that entitlement process is critical. That's the potential game changer.
Plus the usual suspects, commodity prices and weather, always wild cards.
Always. So, yeah, the market seems cautiously optimistic, weighing the current farm struggles against these future levers for growth and cost savings.
Which brings us nicely to that trade idea you mentioned.
Okay, disclaimer again. Purely informational, not advice. Do your own homework.
Absolutely.
All right, so here's the outrageous but plausible pitch for Limoneira, looking out, say, 3 to 5 years. It's a long-term bullish idea.
Okay, I'm listening.
The core idea is that the market currently undervalues the de-risking that's happening and the sheer scale of the asset monetization. It still mostly sees LMNR as just a volatile farmer.
But you're saying the Sunkist deal and the Harvest JV changed that.
Significantly. Think about it. You've got a pretty much guaranteed $5 million annual EBITDA boost from Sunkist starting soon, and you've got his $180 million cash flow pipeline from Harvest JV over 7 years. That's a solid, predictable base.
It cushions the ups and downs of the fruit business.
Exactly. It provides a floor, a level of predictability that wasn't there before. But that's just the de-risking part. Here's the outrageous twist.
The Limco Del Mar property.
Bingo. That's moonshot. Ventura County desperately needs housing. You have this 221-acre piece of land right next to developed areas. Management seems committed to navigate the very complex, very Californian process of CEQ, Associare, LAFCO.
If they actually get that land entitled for housing,
the company's valuation could completely re-rate. Massively. It stops being just an ag company with some land and becomes a serious land developer sitting on incredibly valuable Southern California real estate, plus a more efficient farming operation.
So that $3 to $5 million they plan to spend on entitlement could unlock exponentially more value.
That's the bet. It's plausible because the need for housing is real, the location is strategic, and management is actively working the process. It's outrageous because success is far from guaranteed. The regulatory and political hurdles are immense.
So the trade idea itself.
It would be something like a multi-year out-of-the-money call option strategy. Or, for the less aggressive, accumulating shares on significant pullbacks. You're essentially targeting that period, maybe 3 to 5 years out, when those entitlement milestones for Limco Del Mar might start hitting.
You're buying a call option on California real estate development, basically.
Kind of, yeah. With the Sunkist savings and Harvest cash flows acting like a dividend while you wait for that potential lottery ticket to pay off. It's definitely high risk, long duration, depends heavily on factors outside their control, like regulators and voters.
But the potential upside is,
if it works, huge, absolutely huge compared to where the stock might otherwise trade based just on farming.
wow. Okay, that's certainly food for thought. So wrapping up our deep dive on Limoneira.
We saw a quarter with definite challenges on the farm pricing pressure, volume issues.
But management isn't just sitting still. They've got the Sunkist partnership aiming for cost savings and stability, the long-term avocado growth plan, and these major real estate monetization efforts underway.
Yeah, the whole narrative seems to be shifting slowly but surely. From just being about the next harvest to this longer-term story involving efficiency, organic growth, and unlocking that land value.
And the market, for now, seems willing to give them some credit for that strategic direction.
It seems that way. Cautiously optimistic is probably the right phrase.
We definitely encourage you to check out Limoneira's investor materials yourself. Track those catalysts we talked about.
Draw your own conclusions. Maybe think about what other assets on their books might hold hidden value down the road.
Thanks for tuning in to the deep dive.
We hope this gave you a clearer picture of what's happening at Limoneira.
Join us next time for another exploration behind the numbers.